Now, days after the Monetary Policy Committee of the Central Bank of Kenya effected a larger than expected downward review of the best lending rate, commercial banks are still shy to lower their lending rates in line with the regulator's indicator. Now, with KCB and CFC Stanbic being the only banks that have effected the changes so far, KTN Tonight looks at the country's interest rate regime that continues to be punitive to the ordinary borrowers. On the 5th of September, in its bi-monthly sittings, Central Bank's Monetary Policy Committee reduced the CBR rate by 350 basis points due to a steady decline in overall inflation to a single-digit territory, as well as relative stability of the local currency against world majors, moving its lending rate from July's 16.5% to 13%, promising better times for the Kenyan borrower. Being an indicative rate, the CBR rate is supposed to give direction to commercial banks in regard to setting their lending rates. So far, only two commercial banks, that is CFC Stanbic and KCB Bank, have effected a downward review in their lending rates. It is disturbing that the slow rate of change in the rates seemed to be a pattern going by the sluggish pace of change in July. In a statement when announcing the September 5th rate cuts, the CBK noted, and I quote, "Interest rate spreads seemed high, suggesting that these cost reductions had yet to be transferred to banks' customers," end quote. This statement by the CBK seems to be backed by the fact that despite the two banks having announced a cut in their lending rates, they are setting the effective date on October the 1st for KCB and October the 15th for CFC Stanbic. In defense of commercial banks, the Kenya Bankers Association CEO Habil Olaka, in a letter to the editor of a local newspaper, says, and I quote, "Generally, there is a lag between the movement in the central bank rate and the bank's response. To lower competitive advantage, some commercial banks will lower lending rates much faster," end quote. In the meantime, however, Kenyan borrowers remain crippled by the punitive interest rates.